Nilesh Shah, MD Kotak Mahindra AMC joining in. Nilesh bhai, good afternoon. I mean, we've taken your comments ahead of the budget in terms of what was the expectation as well. With everything coming in, I think from a market perspective, the key highlight so far has also been the STT, which has been increased. I don't want to ask you your overall view on the budget, but a quick question in terms of the impact when it comes to STT on the derivative side.
So undoubtedly, speculators will be unhappy. All the capital market exposure companies also will be unhappy. And even people who are not speculator and not linked with capital market company does carry a tinge of sadness that STT was levied in lieu of capital gains tax. Now STT has kept on increasing thereafter. Even capital gains have kept on increasing thereafter. But at the end of the day, look at from government point of view. STT is like a sin tax. 9 out of 10 people who trade in FNO loses money. The people who made money are HFTs. Now, if you are not bothered about your own wealth, shouldn't you be contributing to the government's coffer, government's kitty? So clearly, this is a very tough decision for finance minister. I just hope and pray at some point of time, capital gains tax gets reduced for investors and let speculators pay through STT.
I think the kind of disappointment that you have also stated, Nilesh, is quite visible in the market reaction to this particular budget. This is Nisha here from the studio. Looking at one small positive for the market participants is the buyback taxation on retail. How much of an impact will that make? And overall, what's your sense on the budget in increasing the growth path and the vision for this particular government?
So Nisha, markets are driven by speculators and their disappointment is visible. For investors, budget does not change their course. And finance minister's own word, this budget chose reform over rhetoric, action over ambivalence, and people over populism. It will take time for people to understand that. Second, more than the understanding, it is execution which is critical. Now, in the buyback, what has happened is appropriate. There were promoters who were taking advantage of dividend tax through buyback. Government plugged that loophole. And now, having realized that you are also burning green grass while trying to burn dry grass, Gujarati mein ek kehwat hai, suka bhegu lilu bare. They are now trying to differentiate between promoter and non-promoter. Promoters buyback will be converted into the non-promoters buyback will be converted into capital gains. That is how it should be. That is how it is globally. After trying to plug the loophole, we have finally taken the corrective action. And let the promoters pay slightly higher tax. For corporate promoter, it is 22%. For non-corporate promoter, it is 30%. So that's a very welcome step. And I hope someday, even in capital gains, one can differentiate between promoter and non-promoter. Today, if I'm a small and medium enterprises business and I sell my business, I pay full tax. But if you are promoter of a listed company and sell business, you pay capital gains taxation. So I just hope and pray someday, like in buyback, you have distinguished between investors and promoters. Similar thing could happen in capital gains also.
Hoping, Nilesh bhai, that not just God, but the finance minister listens to your prayers and something is done in the next budget. But having said that, one of the announcements that stood out to me, or rather the few announcements, had to do with the IT sector and the services sector, but specifically IT, and the push to try and get more data center business back to India. Do you think that this is the fillip that that sector needed? And what, according to you, are the implications of it, at least in the near term?
So undoubtedly, better late than never. We allowed multinational companies to set up data center in Singapore, even though large part of their data was of Indians. Data is like oil. Would we have allowed multinational companies to take our oil without making payment over here? Answer is clearly no. But oil is visible and data is not visible. We allowed Indians' data to go abroad. Now we are taking corrective action. We are encouraging establishment of data centers in India. Rules and regulations are being simplified. Couple of joint ventures have also been announced. And I hope and pray Indian data stays in India. That is necessary from security point of view. That is also necessary from creating infrastructure through which we can share economies of scale benefit with the rest of the world. And finally, if data centers are here in India and there is access given to Indian companies to leverage that data, there will be many data analytics company coming up in India. So overall step in the right direction, better late than never.
All right, Nilesh, always a pleasure to take your commentary on and perspective on the markets, and especially your valuable comments coming in on STT hike as well as also buyback capital gains and the differentiation between promoter and non-promoter. Thank you so much for joining us right here on NDTV Profit.